The JSE expected to contend with struggling Asian markets this morning, with investors still digesting the implications of price pressures in the U.S. U.S. inflation has risen by 8.3% year-on-year in April, but it is still near a 4-decade high and above the consensus expectations. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. He joins us now to talk us through the latest market moves. And Dr. Masilela, good morning to you. Talking of air, between you and I, the rand seemingly firming against major currencies just yesterday, but moments ago you were telling me that it's a sea of red at the JSE. What's going on?
Definitely, Toli, and there's nothing good about this morning. As you said, we just opened down 3%, and we wonder after closing up nicely yesterday, but us and the European markets are only now reacting. I think maybe more of a secondary reaction to those inflation numbers that got out of the US yesterday. Remember, after the release of those numbers yesterday, the market continued to go up because it was more or less priced in. But yes, we are not looking okay, and we are driving down mainly by our resources as commodity prices are down and the rand continues to weaken.
Let's talk about company news briefly then. The share price of famous brands, this is the owner of Steers, Wimpy, Mug and Bean, and you name them, surging more than 10% at some point after the group flagged a rise in headline earnings. Talk us through their numbers.
Definitely, and that should happen, because remember, people are now back to their normal way of living. Yes, we've seen that the impact of the lockdowns and trading restrictions continue to have an impact on the company, but the guys expected their headline earnings per share to go up by almost 555%. And yes, going forward, they have to be cautious, well, because of this higher employment number, because of interest rates which are going up, and also because of this high inflation, which continues to be a monster. Because remember, this high inflation and the reserve banks or central banks around the world continue to increase interest rates will definitely have a negative impact on the economy and a direct impact on disposable income.
Sure. Let's conclude the conversation with the mining and manufacturing data for the month of March, which is due a little later. Some people expecting it to paint a mixed picture. Your expectations about what data is likely to look like, whether or not the mining indaba, for example, will help bolster the investment drive in the sector. The president has been working very hard to try and attract that investment.
Definitely, he has been. And remember, starting with mining itself, for February, it was down 6%. We don't expect some nice improvement out of that. We still expect a negative number. And we know that mining itself is no longer contributing 7% to our economy. It's contributing almost 8.7%. And yes, we hope that with all this red tape removed, issues resolved, then we'll continue to attract money into the sector itself. And it's not just for mining purposes, it's also for energy part of things. And also when it comes to our manufacturing, we've seen just a mere 0.2% increase in February. But we don't expect anything great out of that. Remember, load shedding continued to be an issue. So that also will give you a glimpse of what happened to our first quarter economic growth, because those two sectors account for just more than 22% of our economy.
How did I anticipate that you were going to mention load shedding in your last comment there? Makwe Masilela, a very grumpy man this morning.